Hello and welcome. Today what we are going to be looking at is we're going to be looking at financial statements. Now when we're looking at these financial statements, we're going to be looking at them in a slightly different manner than you may have in your accounting classes. Much of this is going to be a review for you, or at least should be a review for you, but we're going to go over some of the things that are more relevant for us from a finance perspective. Right, so what we're looking at are financial statements, and so the difference between financial statements and financial accounting in general and cost accounting, right, is cost accounting is looking at things from a managerial perspective. Financial accounting is prepared for external shareholders, right, external stakeholders, those that are wanting to evaluate what's going on with the company, right? So a company, a publicly traded company might prepare financial statements to present to the IRS for paying taxes. They're going to present them to the SEC if they are publicly traded, and allow them to for stockholders to look and see what's going on with the company in particular. Okay. Now, on financial statements is that we're going to be looking at these slightly differently than you may have in your accounting classes, right? In your accounting classes, you looked at how to prepare these financial statements. When we look at this from a finance perspective, is that we're looking at these for evaluating what has been prepared for us, right? So if I am thinking about buying stock in Apple, okay, I am going to open up their financial statements and I'm going to look at their financial health and figure out if I think that they are a worthy company at that price. Right, and so there are three different types of financial statements that we are interested in. Just think for a second if you can remember what those three types are. Okay, the first one is going to be the balance sheet. Okay, and the balance sheet, as we know, is just a snapshot, a point in time, right? It's basically taking a snapshot. It's looking at our assets, which are equal to our liabilities plus our owner's equity. Okay, so the basic part here is we have the right and the left-hand side of the balance sheet. Snapshot in time. What exactly is going on with our company right now today, right? It's basically, it's printing out your ATM receipt, okay, if you can think of it that way. Just a snapshot. What's going on exactly at this point today, okay? The second thing that we're looking at here is the income statement, okay? And if you recall, the income statement, it's also referred to as the profit and loss statement. Okay, which is basically what we're looking at here is what, over the last period of time, what the revenues have been generated as well as our expenses. Okay, so it's saying, is my company profitable? Is it not? Okay, and then the last one that we're looking at here is what's called the statement of cash flows. Okay, and the statement of cash flows is basically looking at the source of funds. Okay, we're going to go in a little bit more detail on each of these three together, but the basic part here is that we have these three different financial statements that we need to look at. We have our point in time. What is happening today, right now with the company? What is going on? Who do we have to pay? What sort of revenues do I have coming in? What are my accounts payable, accounts receivable, etc., etc. Okay, who do I owe money to? Who's coming in? Then we have our income statement. Is this firm profitable or not? Okay, so that's kind of a past-looking statement, is what's going on with revenues and our profits, because we really want to know, is this company making money or not? Okay, so that's kind of the past-looking, and then we look at the balance sheet to kind of figure out where we are today, and then we have our statement of cash flow, basically where the source of funds are, what cash is coming in, what cash is going out, and where that cash is going, right? We have a couple different areas that it can go into. Now, from a financial statement perspective, is that we are looking at this from valuing that share of Apple, right? If we're looking at Apple, we want to pull all these financial statements and we're going to look at them and we're going to evaluate this and we're going to forecast into the future. We use these financial statements to look at the future and see what we think it's going to do in the future, okay? And that's the basic part of financial statement analysis, okay? The following videos are going to go into a little bit more depth about these individual financial statements.